Hello everyone, it's Professor Reiko here, continuing on with our videos on pensions. So today what we're going to cover in this video is prior service costs. So if you think back to the second video, we covered the components of pension expense, and if you remember there was 5 of those. We saw the first 3, which was service cost, interest, and our actual return in the last video. Now what we're going to do is add one more in. And if you remember, the fourth component of pension expense was amortization of prior service cost, all right? So just real quick, what prior service costs, well, let's just look at our information here and then we'll get into it. All right, so we can see here's the given information for the problem. So what we're doing is continuing on from video 3, all right? So the ending balances in video 3 will be our beginning balances here. Right, so if you haven't watched that one, it might be a good idea to go back and at least see where all these numbers are coming from. All right, so we have all of our stuff for this time as well: service costs, actual return, contributions, benefits, the settlement rate, which remember is for interest costs. And then if you look here, we have 2 new items. We've got amortization of prior service costs, and this accumulated OCI is other comprehensive income. So these are our 2 new items that we're going to deal with. So remember, prior service cost, all right? So notice here it says amending the plan to provide benefits for years of service prior to the start of the plan, okay? So let's just kind of go back through things. Service cost, remember, is a component of pension expense. Right, service cost means, when I'm saying service cost, I'm talking about this service cost up here. Service cost means our employees worked another year, therefore we are going to owe them a little bit more when they retire, so it increases our obligation and we recognize it as pension expense. All right, so we saw that in the last video, and it'll be the same in every single example we do. All right, prior service cost means we're going back and recognizing prior years of service as part of their service overall. Okay, so these are amending the plan to provide benefits for years of service prior to the start of the plan. So the example I gave in the last one is, assume you guys all work for me. Let's say you've all been working for me for 5 years, and we start a benefit plan today. All right, well, you guys would want to be your prior 5 years to be included as part of your service. So I could amend the plan and go back and say, all right, let's recognize those prior 5 years. All right, so those prior 5 years that we're recognizing all at once is what we're dealing with prior service costs. So prior service costs is separate from service costs. All right, so when we notice here the accounting for it, there's 2 different things we have to do. So notice we say we initially record it as an adjustment to other comprehensive income. So that's going to be a new column in our worksheet, and increase the PBO. Okay, so that should make sense, because remember, our PBO is our obligation to pay our retirees when they're all retired. So if we're recognizing more years of service, that makes sense that our obligation should go up. Okay, so we should have to increase the PBO. All right, now notice here, that is not, prior service costs itself is not a component of pension expense. Notice here are 2 things that are going to be affected: are other comprehensive income and the PBO. What does affect pension expense is the amortization of it. All right, so amortized through pension expense over the remaining service life of the employees. All right, so a couple things here. Your book will show you how to calculate the amortization. I typically, for my students, just give them the amortization number. You know, it's kind of one of those things for the sake of time. That's one area where, you know, in the grand scheme of things, I don't think how to calculate the amortization of prior service costs is that important. So I typically just give them the number just for the sake of time and other stuff that we have to cover throughout the course of the semester. So just be aware, your teacher may actually require you to calculate that amortization. If so, that's fine. Just follow what they're teaching you, be able to do that. All right, so we've got 2 things that we're going to do. All right, and so anyway, so back here, so the amortization. So up here, the amortization amount, like I was saying, I'm giving to you. So that's what we're going to amortize it to pension expense. All right, so a couple new items. So we know how to handle service costs. We know how to handle returns, contributions, benefits, interest. But let's talk about our new items here. So our new item is the amortization of the prior service costs. And actually, I probably should have another thing down here for the actual amendment. So if you look right here, it says we're initially going to record it. So increase the PBO. So that's going to be our credit to the PBO. And then we're going to have a debit to other comprehensive income. We'll see that on when we do the worksheet. All right, the amortization of it is going to increase pension expense. So we're amortizing something, which you usually think of amortization expense, but we're just recognizing it as a component of pension expense. So it's going to increase pension expense. That means it's going to be a debit in that column. And then we are going to increase, oops, that's a C, our OCI, other comprehensive income, and we'll actually call this other comprehensive income dash prior service costs. So that will be a credit. Now look, it makes sense here. Look at this. If we are debiting other comprehensive income to start, so that means it's going to have a debit balance initially. Remember, if we're amortizing something, we're reducing it back down to zero. All right. I mean, go back to your chapter when you're dealing with like, the amortization of like a patent or something in your intangible asset chapter. All right. We're amortizing that value down. Okay. Same thing here. So if it's a debit balance, then we have to credit it to make the balance decrease. Okay. So kind of keep things like that in mind to help you out. All right. Now interest expense. Now remember, interest expense is the beginning PBO times the stated rate. However, when we have an amendment like this, it's actually going to be the beginning PBO, which is last period's ending, plus the amendment, because the amendment happened at the beginning of the year. If you look up at the date there up here, January 1. So technically our balance at the beginning of the year is increased by the amendment. All right, and we're going to have times 10%, which is a settlement rate. So we've got our beginning PBO, which was $168,000. Now remember, that comes from the ending balance of the last video. Our amendment given up there at the top there, or in the middle of the page, is $120,000. All right. We're going to multiply that times 10%. All right. And we're going to have 28.8 will be our interest cost. So that's the only time we have to kind of deal with that adjustment. All right. So let's go to the next page and start filling in the worksheet. All right. So first thing you'll notice up here that we have, I'm trying to get it. Well, I can't quite get it all on one page. This is our new column. And notice it has a zero beginning balance that was given, okay? So we have this amendment. So notice here, row A, prior service costs. This is the amendment row that we're dealing with, all right? So let's do the amendment first. All right, so we said we are going to have a debit here and a credit here, all right? So really, we have an updated balance here. I'm just really going to update this one right here to kind of prove the point on the interest. So remember, the interest is going to be based on that updated number. All right. You could probably skip that row if you wanted to, but just don't forget to calculate the interest on the updated. All right. So we've got the amendment in there. All right. So this amendment's important to remember. So what you'll find when you get into your homework and probably even your test problem, this row right here, they might give you, say, the beginning balance is $120,000. All right. And they may not tell you whether it's a debit or credit. Okay, so sometimes students struggle with remembering what the balance is, but go back and remember when this was created. The other comprehensive income dash prior service cost column, that number was created when the plan was amended. When the plan was amended, we increased our PBO and had a debit here. So don't forget that. That's how it's created. So you can remember that to kind of put the beginning balance in as the correct debit or credit. All right, service costs. All right, so remember, service costs increases pension expense. So these numbers were given, and it increases our obligation because our employees worked another year. Interest costs we calculated already, 28.8. Remember, it increases pension expense and it increases the obligation. All right. Now notice those two are just like they were in the video 3. All right. Actual return was given. Now remember, this thing, actual return reduces pension expense. And remember, the actual return is our plan assets having a return on what's invested. All right, here we have our new one, amortization of the prior service costs. We talked about that in the previous page. All right, so that is $42,200. That number was given. All right, and then this is going to be a credit of $42,200. All right, so as I was saying on the previous page, remember, if you get confused on signs, all right, then make sure if this is a debit balance up here, then we have to have a credit. If we're amortizing, we have to have a credit here to make the balance go down. Okay, so use little things like to kind of help you remember that. It's also an expense, so it's going to increase expense. So over here, we have to have a debit. All right, contributions. Remember, contributions are us funding the plan. So it's $28,000 coming out of our cash and being sent to the trustee to be invested. Benefits paid. Remember, benefits paid is the only item that does not affect the summary journal entry side. Remember, this divider right here, to the left of it is the summary journal entry. To the right, we're basically just kind of keeping up with balances. So remember, that lowers our obligation with the debit because we're meeting a portion of our obligation by paying our retired employees. And remember, the trustee is the one actually sending the checks to our retirees, so it's going to reduce the value of the assets with the trustee. All right, so just a couple quick things here. There's gonna be one more column that we're gonna add in the next one for gains and losses, which is our last component of pension expense. But just a couple things here. Everything on this page that we see will always be the exact same sign. Now, I guess you could argue if we had an actual loss right here, it would be a different sign, but I don't think you're going to see that in a problem. So when you're doing the reason I like teaching it using the worksheet is because every single number always goes in the same box, always. And then the only things that can change signs are things that can be gains or losses, which we'll see in the next video. All right. So everything we've done to this point, everything goes in the same box. Everything is the same sign. And that should help you. The more you do these, the more you practice, it gets a little bit easier because you're kind of used to putting things in place. And look, over here, all these items, I can do these in any order I want to. Right? Because at the end of the day, remember, we're just going to net them down here at the bottom. So it doesn't matter what order. I try to be fairly consistent with how I do it. So, when it comes to test time, I'm able to kind of put it down in order a little easier. All right, so our summary journal entry, 66,800 here, 28,000 here. All right, now this one, be careful. So this one, remember, we have two items. We had the initial amendment. That actually happened this year, and this happened this year. So we have both of those happening this year. So our ending balance is 77,800. And then remember, we're plugging here 116,600. So notice this right here is a huge credit number, which means we're going way more underfunded. Okay, but that makes sense because we went way more underfunded up here with this amendment and didn't really increase our contributions that much. Okay, so it makes sense that we're way more underfunded now, and that's what's going on. All right, so our ending balances. So now I'm going to keep up with this ending balance, which is 77.8, because remember the beginning was 0, now it's at 77.8. This is now up to 118,600. Now remember, this number should be the difference between these two over here, which is 317,300. And this is 198,700. And if you take, oops, that's not there. Sorry, I was about to put parentheses around that. So the difference between these two numbers should be the difference between those two numbers. Because remember, this number right here tells me that I'm underfunded by 118,600. And then if you compare these two numbers here, you can see that you're underfunded by 118,600. Now, if your teacher makes you write out the summary journal entry, I typically don't, because all I'm doing is rewriting this row right here. But here's my two debits, 66.8 and 77.8, and here's my two credits, 28 and 116.6, and you just write it out in journal entry format. All right, so this is video 4 for pensions. I know it got a little bit longer here, and the next one might be a little bit longer too as we introduce gains and losses. But the main thing, kind of use these worksheets. I think these worksheets actually help students to keep things straight. I've kind of noticed come test time, usually if anything happens, students might leave out a row, but typically they're putting everything in the right spots for the most part. So the next one we're going to deal with gains and losses, which is one extra step, and that will get us pretty much to almost a complete worksheet. And so we'll add another column in and a few more rows in with the next worksheet, and then continue to build. So these numbers down here, when we get to video 5, these numbers right here will be the beginning balances on the top of my worksheet for video 5. So keep that in mind as well. So keep tuning in. We'll keep building on this and get to a complete pension worksheet by the end of it. So hopefully you'll be good to go with your homework and come test time. So hopefully you're enjoying these. Feel free to like the video, subscribe to them, and share them with your friends. So hopefully it helps them come test time as well. All right, take care. I'll see you next time.